India's power consumption rose over 9% year-on-year to 117.84 billion units in February this year. The peak power demand, which is the highest supply in a day, too, rose 209.66 gigawatts in February 2023 from 193.5 gigawatts in the year-ago period. This rapid rise in power demand, which analysts anticipated to witness in March 2023, surprised street estimates and bolstered related stocks. In the past 1 month, shares of power companies like NTPC, Tata Power, Torrent Power, JSW Energy, ABB India Power Grid, and Siemens surged up to 17%. In comparison, the S&P BSE Sensex declined 0.2% during the same period. Going ahead, analysts believe upbeat economic activity coupled with sustained demand during summers will lift the fortunes of power companies. Antu Thomas of Geojit Financial Services expects power demand to rise 10% YOY to 230 megawatts by April 2023.
India's power usage increased by 9% YOY to 117.8 billion units in February 2023, as compared to 108 billion units in the same period a year ago. This is due to an increase in economic activity and a rise in temperature. We expect this trend to continue during the summer season. On the economic front, manufacturing PMI shows steady growth in February with 55.3%. and an enhanced probability of heat waves in most parts of the country during March, April, and May, the total demand can increase by 10% on a YOY basis to 230 megawatts in April. With the impact of El Nino, the demand can sustain during the year. To meet the demand, the power production from the existing plant, that is conventional and non-conventional sources, needs to pick up. To support this, the government has directed that thermal power plants that use imported coal to run at full capacity. The Railway Ministry had also said that they would be deploying 1.25 lakh wagons for the purpose of coal transportation, which would be helpful in meeting the coal inventory at the power plants. We remain positive on the sector, and on the stock front, we are positive on Tata Power and NTPC on a long-term basis.
In order to meet peak power demand, the government had directed all imported coal-based power plants to run at full capacity. With this move, analysts believe these plants can fully recover their high cost of generating and supplying power, which was adversely affected by increased international coal prices.
As per government data, electricity consumption grew by 9% year-on-year to 117.84 billion units in February 2023. This bodes well for the power generation companies as sustained demand improves their utilization, which is visible in the improving PLF data. Improved demand may also increase the tariff rates in the short-term market, which in turn will be profitable for companies having merchant capacities. The government has invoked Section 11 of Electricity Act 2003, directing imported coal-based plants to run at full capacity till summer based on the anticipated demand and domestic coal shortage. This will help imported coal-based plants to fully recover their high cost of generating and supplying power, which were adversely affected by the increased international coal prices and inability to pass on the price increases earlier. However, in case domestic or imported coal supplies are hindered, or El Nino phenomenon results in lower pace of economic activity and hence lower demand, then power companies may not end up benefiting. Hydropower companies may get affected in case of deficient rains, as their reservoir levels may deplete fast. Also, lower water availability may affect the PLF of thermal power plants, as water required for cooling purposes may not be available to the extent required. However, in such a case, solar-based power plants may do well due to higher availability of sunlight. Our preferred picks in the power sector currently are NTPC, Tata Power, and Power Grid.
While peak summer may still be some time away, analysts remain bullish on the road ahead for the sector and suggest investors buy related stocks only from a long-term perspective. Meanwhile, as regards today, domestic markets will be swayed by the rupee movement, global cues, and foreign fund flow action.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.